Welcome, everybody, to our first episode of Mortgage Talk. You've got Alyssa Iddings and Desiree Stewart here, and we are going to talk about our local mortgage market. Desiree, how are things going for you?
It has been busy.
Yeah,
Yeah.
me too.
Increase in applications.
Yep.
People are inquiring about buying homes. It has increased quite a bit.
I think it has a lot to do with probably people's leases coming up, and it's the
Didn't think
warmer
about
weather.
that.
People like to move in the warmer weather.
Mm.
So everyone waits until the spring when things heat up.
The warm weather brings them out the woodwork.
It sure does. Yeah. Okay.
So, Alyssa, what do you think about the NARS settlement? What are your intake on that?
Yeah, so it's one of the biggest things that's happening in the industry right now. It's going to impact all of us. So I think a lot of things are still, panning out. We don't know what's going to happen. But I know a lot of people are worried about first-time home buyers and, specifically first-time home buyers because they're the ones that are going to be impacted the most from having to pay their own buyer's commission.
Okay.
Because when they're already trying to save for their down payment. And now
Right.
there's this added cost. But I do think that maybe we'll have some growing pains. But overall, I think that the culture is going to stay the same.
Okay.
I mean, if you think about it, I'm in my second home now. And when I go to sell it and buy the next one,
Right.
my next one, if I'm to pay the buyer's commission, it's going to be probably most likely on a more expensive home that I'm in right now.
Right.
So why not just pay the buyer's commission in my home that I'm in, like pay for the buyer's commission when I'm selling,
Right.
where it's less than when I'm going to buy a more expensive home. And so that would kind of keep that same culture of when you're selling, you pay the commissions, and when you're buying, you don't.
Okay.
Does that make sense?
It does make sense.
I feel like that would, hopefully that's what will happen. Who's to say?
Yeah.
None of us ever know. But
And this is still new. So as it,
Right.
progress and go on, we'll see some changes
Yep.
and maybe stuff we never even thought about may come
Yeah.
about. Who knows?
We did just get approval from the VA to let the buyers pay for their commission, which was pretty big. We were all a little bit worried about that.
Right.
So that'll be, a good change here.
Yes.
Now that, it'll make VA loans more accessible.
Right.
Because that was about to be a big problem. And FHA said, they won't include that in the seller concessions.
Right.
So that'll be good. It'll keep us really where we are right now,
Right.
which was a good place to be. So
Good,
yeah.
good.
Yeah.
It's some changes about, but again, at the end of the day, we're here to educate our clients, educate our realtors, and just, sometimes being that ear is really what we are.
Yeah. Have you had any commentary from your realtors? What have they been saying?
So a lot of them are really not concerned.
Okay.
Their brokerage owners are really helping them educate them on what they are going to do within their own agency. So most of them haven't had any concerns about the settlement affecting them in any type of way.
Right.
Yeah.
I've also heard of some realtors talking about going on having flat fees or hourly rates. So I thought that was kind of interesting how they would go about that, just to kind of because I think the mindset there was that buyer's commission was going to go away.
Right.
And so then they would just get paid by the hour. So
Yeah.
that was a really interesting one. I'm not really sure how that would pan out. But I did hear from quite a few agents that was something that they were thinking about.
Yeah.
And then I heard from one brokerage where they were doing a seller select program.
Okay.
Where the seller got to kind of decide how much they were going to pay up front. And this was actually a few months ago that I heard about it. So before we even had any sort of guidance on it. Not that we have a whole lot now, but we've got some.
Right.
So yeah, it'll be a really interesting time. I do think that we're set up a little bit better than most states because, they're going to be doing the buyer's contract now, which North Carolina has been doing for a long time and I think is great. So yeah, I think we'll see some change, but I think that North Carolina at least is going to be impacted a little bit less than other states.
Gotcha.
So that'll be good. Yeah.
Cool. Well, again, that's, continued conversation about it and then just we'll have to wait and see.
Yeah.
See what the outcome's going to
be. Yeah.
Cool. Our next topic I want to talk about was renters.
Okay.
You know, I talked to quite a few renters. I'm pretty sure you do as well.
I do.
What is some of the stuff you're seeing or hearing from your renters when you're kind of coaching them on what they need to do to prepare to buy a home?
Yeah. So one thing I'm hearing from a lot of people recently is they're trying to get out of their rental, but they're shopping for a dream home. Yes. Which is great. And I love that for them. I really do. We all want to live in our dream home, right?
Right.
However, most of us start with a stepping stone house is what I try to tell people.
Exactly. It's crawl before you walk.
Yes. Yeah. It's just like how our first job was not our dream job.
Right.
Okay. It wasn't the job that we dreamed of when we were a little girl.
Exactly.
We had to, you know, have those stepping stones.
Right.
And so I try to remind people that, you know, when you're leaving an apartment or a rental home, that first home might not be the dream home, but it's going to get you there faster than if you saved up that money
in the rental
on
house.
your own, and dumped money into a rental home instead of your own home. So, and I think that that's really just the educational piece of, you know, educating borrowers on what home equity is, you know, and how you build it over time. You know, and just the investment of owning a home. So I do feel like once I have that conversation, people are starting to shift a little bit. They understand a little bit more. But for example, I just had somebody recently that I helped, and we were trying to figure out how much money she was going to have to buy her next home. So she's purchased her first home already. So she's trying to figure out how much to buy, or how much she'll have for her next home. And she took what she originally purchased the house for 8 years ago and subtracted what she has in her mortgage now. And she thought that that was her equity. And I was like, no. You bought this house for, you know, I think it was like $170,000. And we just got our appraisal back on it and it's worth $285,000. So I was like, here's all this money that she didn't even realize she had. So I think it is a lot of education.
I've even had a renter thinking that the equity was escrow. So I had a conversation about, you know, we escrow, you know, your payment each month, which includes your taxes and insurance. And she was like, oh, I thought that was the equity. I was like, no. Let me break this down for you. But again, I like those questions because if they're asking questions and they're thinking that it is that and it's not, that's our job. We're supposed to educate them and let them know this is what it is. This is what equity means. And this is where, you know, we want to help you put you in that position so that you can get the equity out of your home and stop paying somebody else's mortgage.
That's exactly right.
That's it.
I think education is probably like one of my favorite parts of our job.
Oh, yeah, definitely.
You know, I get people all the time who come from other lenders that they just had no idea what was even going on. You know, they just really had no idea what they were even doing. They're just signing things. And, and I'm like, okay, let's slow down. And like one of the first things I do when someone goes under contract is I go over their loan estimate with them. And I tell them, you know, we're going to go over your loan estimate. And the purpose of us doing this is one, so that you know what you're paying for. And two, because it's an estimate and not, you know, your closing disclosure, which we'll talk about in a minute. But you know, it's an estimate. So you need to know what all
those figures are.
Yeah, what that is, how it can change, why it would change, you know, so that things can't just change for no reason, right? Like I can't just put whatever I want on there. So we go through it line by line. We talk about what everything is and how everything could change and, you know, if it's going to change. And then I say to them, you know, when we get down the road and we get closer to closing, we have final fees. You're going to get a document called your closing disclosure. We're going to look at them next to each other. And if anything has changed, it should make sense to us. And if it doesn't make sense to us, then there might be a problem and we need to fix it or investigate it further to figure out what's going on here. And everyone's like, oh, wow, I never thought about that. Like, I just thought, you know, fees were fees.
OMG.
I know.
Well, if I can pay fees less than what I need to, I want to know that. You know?
So, Yeah, I have seen a lot of loan estimates recently with discount points. Yep, yeah.
Okay.
So, and I say recently, but it's actually not very recently. It's been forever. They've always been on a bunch of loan estimates, and most people, they don't even know what they are.
Right.
First of all, and second of all, they don't even know if they benefit them.
Exactly.
So then, I explain to them like what a discount point is. And for people who don't know what a discount point is, it's basically paying interest up front at closing, as opposed to, through your monthly payment, and you pay it at a discounted rate.
Right.
And so you basically can, it's also called a buy down. So you can buy down your rate from whatever it was without discount points down to a lower rate, and you pay that difference through the discount points up front. So now your monthly payment is lower.
Right.
And the idea is that whatever you're paying, you look at however much you're paying and then however much you're saving per month, and you figure out where your break even is. How much money do you have to save per month to pay back what you've paid to get there?
Right.
And then, are you even going to keep that house for that long?
Right.
If it's going to take you 5 years to break even, and this is a stepping stone house, are you realistically going to be in this house for 5 years?
Exactly.
And if you're not, then it was never worth it.
Right.
So, that's a conversation that I like to have with people a lot. Because they don't know. Instead, they just see a loan estimate with a lower rate than what I'm quoting them without discount points.
Right.
And they say, oh, lower rate must be better.
Right.
So,
but don't know what's going on behind the scenes to get that discount rate.
Yep. Yeah.
So
exactly.
that's good, Alyssa. That's great that you're taking the time to educate, because like I said, that's the biggest thing.
Yeah. Yeah.
Back to the renters, I do want to touch on, I always talk to renters about their why. Like, why are they wanting to stop renting and buy a home? Because I know sometimes people say, oh, I just need to buy a house. Well, we need a little bit more information about that, because, there is an expense that comes with buying a home.
Right.
It's not, if you paying a flat $1,500 for rent, some cases they have their utilities in there, their cable bill, so it's a lot of different factors that they don't really know you will have to take care of outside of a mortgage, that they currently are not taking care of or having an expense for. So the biggest thing is for me to educate them on what it looks like to have a house and the expenses that come with having a house, versus just one flat fee of a rent.
Yeah. Are you prepared to mow your lawn every week?
Right.
Versus someone else doing it for you.
Yeah. Or single family or townhome. Because you may get in a townhome, you may necessarily not have to do any outside work.
Yeah.
So understanding that.
Yeah.
Because I get people, they was like, Desiree, I ain't trying to mow no grass. I'm not planting no monkey grass. None of that. So I'm like, okay, so we might need to look at a condo or a townhome for you, because that can, check that off. You ain't even got to worry about paying somebody to do the grass. Your HOA will, which, it's a couple dollars extra each month. But, I have people in my neighborhood, they're paying people $150 to mow their grass.
Yeah. So speaking of HOAs, I found something out recently that I found really interesting, and it helped me get a borrower qualified. So her debt to income ratio was really, really close. And so I was trying to get rid of things as I could, or lessen cost as I could. And so I thought back on this one purchase I had a long time ago, where he was also really close, and things were kind of falling apart, and we were trying to save it however we could. And we found in the HOA's master policy that their insurance policy actually covered the interior of the unit. And so he didn't need homeowner's insurance. So I said, oh, okay. Well, okay. Not that he didn't need homeowner's insurance. He still needed a policy to cover his personal items in there. But they covered like the cabinets, the flooring, the things like, so it was.
So the HOA, the association fees cover that.
Yeah. So the master policy the HOA's master policy covered the inside of the unit. So I only had that on that one transaction. So then I have this girl, and I'm trying to figure out how to make it work for her.
Right.
And so she's looking exclusively at condos. And so she starts sending me all these condo association master policies, and I'm digging through them. And I found that a lot of them, that happened. There was a few that, you know, it's not always the case, but there was a few that didn't cover it and she needed her own policy.
Yeah.
But there was a solid amount of HOAs that did cover 100% replacement cost.
Nice.
And we were able to put in an offer on those. Whereas if I didn't know that, her DTI would have been too high and I wouldn't have been able to give it to her. Yeah. So it was really interesting. And I was pleasantly surprised to find that out. And then I started thinking, how many people have more insurance than they needed? You know?
Oh, I know that firsthand.
Yeah. But with that, I also found out that you need to, in order to use that insurance, you had to have done it at closing. Like you can't just switch now. If you're already in a condo, you couldn't just switch now. You had to have done it at closing, and let the HOA know that you were going to be on their policy. And just like we do now, we had to put our mortgagee clause on that policy. So it was something that needed to be done at closing. But, you know, just an interesting tidbit. If you've got someone looking for a condo and they're tight, might be worth looking into.
Gotcha. Yeah. That is a good tip.
Yeah. If you ever just want to sit around and, you know, read through master policies because you're bored.
Do that. Of course I do. Yeah. But yeah, any way that can help, obviously, with that DTI to get the bar approved, that So that is definitely something that I'm going to take note of. Yeah. So what else you want to talk about, Alyssa? So we've covered the NAR settlement. We've covered some rentals. How you feel about dating the rate?
Dating the rate. Yes.
Let me slow that down.
Yes, I do still think that it's a good conversation to have with people. Everyone tells me, you know, I'm going to wait until rates come down. I'm just waiting and waiting and waiting and waiting.
Right.
And I mean, really, when you dig into it, the amount of money that you're paying in your rent, if you are renting, and the money that you're going to spend on the same exact house later, it really doesn't make sense. You might as well just refinance later when the rates come down, but get into the home now when it's at, you know, a lower price.
Right.
And everyone, you know, I hear all the time that housing prices are going to come down because COVID inflated them. And, you know, while there are markets where that's true, for sure, you know, that did happen in some markets. It's not really here.
No.
You know, we're talking like, you know, San Francisco was one of them.
Okay.
You know, like bigger cities where things were kind of inflated anyway.
Right.
But yeah, that's not really happening in our local market. And I think that that's another important thing to educate people on is everyone looks at, you know, national news, which is great. Sure, we should consider that. But national news isn't Greensboro or Winston-Salem or, you know, the Triad in general. It's not, or even just North Carolina. It's just not. Everything is different from market to market. You know, even like neighborhood to neighborhood, things can be way different.
Yes.
So it's really important that you're talking to your lenders, that you're talking to your realtors who are in it every day.
Right.
Reading HOA policies, you know, in our local market.
Yeah.
Because we're the ones that know what's going on.
Right.
You know, and so, like I had a guy the other day who, he was like, oh yeah, I saw like the national, like average interest rate was whatever it was. I don't even remember. It was a couple weeks ago, but, and I was like, okay, well, like, let's think about that for a second. So first of all, you know, the national rate is usually looking at, you know, in the price point of the average home price, which was not where he was looking. He was looking in like the 450s, and your average home price is like 250. Okay, so there's a big difference. Okay. National rate is the entire country, not our local market. So there's a big difference. Also, I told him, when you look at the national rate, you usually have to click that little see more button that gives you the loan scenario that told you what that rate was. And most of the time, it also says with X amount of discount points, which is we're not talking about them, or if we are, it's just a different scenario,
right?
You know, so and he was like, oh wow, I thought that was like applied to me, and I was like, well. No, no, like the reality is that it doesn't.
And that is common. Most people see a scenario and they think, oh, that's how it goes. But we're finding out each individual is totally different. You cannot treat each buyer applicant as the same one before because it's totally different.
Yep.
So cool.
Yeah. Anything interesting happen with you recently? Any interesting loans you've had, or
all my loans are interesting.
Always true.
Yep, all of them interesting.
No
but
two are the same.
I love the fact that I help these people on their journey to buying a home. That part, even if I'm, like you say, reading documents and like, oh my God, if I read another line, is the fact that okay, I'm helping someone make the biggest decision of their life. So I have to get through this. So, but that part to me helps a lot when I'm helping people. It's just that journey, seeing them where they start, where they end, and then actually, seeing them get into their home. Oh my God, that is the best feeling ever. I love that.
What do you do when you get stuck? When you have, like, you've looked at a loan for too long. You know that there's a solution, but you're stuck. What do you do?
I typically just walk away from it. Like my thing is just, okay, let me go downstairs and maybe turn on some Al Green and just boom. Take me to another place, because music does that for me. I can go back to 2002 with one song. And okay, go back to it. So anything that kind of just really takes my mind off of it. Normally when I come back to it, I'll be like, I've been looking at this and it's right here in front of me and it just pops out. So stepping away is really big for me when it comes to, looking at the same document for numerous of minutes.
Yeah, me too. If you ever see me at Red Collection on Mill Street in the middle of a workday, it's because I have a hard loan and I'm trying to work through it.
I got you. I love Red Collection.
I just walk through. It's like the perfect store where I'm not going to buy anything, or I might.
I'm like,
let's be realistic. I might buy something.
Right.
But it's the perfect distraction and it takes me like 1 hour to get through the whole store. Okay. And I have my little route that I go through the store and I see all the fun stuff. And it's the perfect amount of time to just completely like remove myself from the situation. And then I sit back down, and usually like within 10 minutes of me sitting back down at my desk, I'm like, oh,
there you go.
There it is.
Yep. But that's the whole part of being a mortgage specialist, loan officer, trusted advisor, all that stuff come into play because, we're here to help our clients. Ultimately, that's just what it is.
And talking to each other, when we have those harder loans, talking to each other, because there are those little tidbits that unless you went through something like that, they're just, no two mortgages are the same ever. You would think like characteristically that they're the same, but something about those people's lives are different. And until you're in that situation, there's just so much you learn every single day about mortgages. So,
Well, it's good that you say talk to each other, because we have our senior LO, Penny. Which is going to be our Penny letter. More to come. I have called her numerous of times and even said, okay, I promise this is the last question. And she just laughs at me because I'm like, I need someone else. And she's been in the game for a minute, longer than I have. So she can see stuff that I may be overlooking. Or like, Desiree, did you look at this? And I'm like, I looked at it, but it just didn't pop out on the paper. But she is a great resource.
She was the one that helped me figure out the HOA policy the first time when the loan was kind of blowing up. I was like, oh, how do I save this? And she was like, let's try this. I was like, so Penny's the best. So if you guys have questions,
yes.
If you feel like you're maybe in a particular situation that you need some advice on, put it in the comments, shoot us an email.
Yes.
Our contact information will be at the end of this video. So shoot us an email. Let us know what's going on in your lives, what you want us to talk about, and maybe a letter to Penny.
Yeah.
We would love to answer those questions in our future videos.
Yep. Sounds good.
Yeah. Desiree, someone calls you and says, I'm preparing to buy a home. What do you tell them? What's some general advice that you give people?
I know the two things I always ask is, credit is one big one that I kind of gravitate to, because I want to understand if they understand what their credit is and what that looks like. Because I have some people, and it can be various of ages, and they was like, oh, I can't look at my credit. And I'm like, why? Like, it's your credit. And what if something's on your credit report that it's not yours and you're not even looking at it?
Yep.
And you get a free one every year. So it's like, I always start with that. And then understanding their income. That's the second thing. Because I have some people was like, oh, I get Social Security, or I get this and I get that. And I'm like, that's income. Like, we use that. For some reason, they think certain income we don't use.
Right.
So it's like, talking to us LOs is, let's understand what income we can use.
Right.
Yeah.
Yep.
So those are the two I kind of talk to first, and kind of get a clear understanding where, what they understand about it, and then, advise them on the next steps.
Yeah. Yeah. So on credit, a big thing is that what consumers see is not what we see.
Right.
So usually my rule of thumb is, let's say somebody said that they had a 700.
Right.
When I pull their credit, they probably actually have a 680.
Right.
It's usually 20, 25 points lower.
Right.
And a lot of people don't understand that. They think that what they see on Credit Karma is the credit bureaus saying, here's what this person's score is, which is not true. It's actually when we pull people's credit and they get 10,000 phone calls afterwards because the credit bureau sells their information. All of these credit reporting services are actually the buyers of that information, and they're using all of that to simulate a score.
Right.
So it's not your actual credit score, and everyone thinks that it is. And there's this moment of like, wait a minute, I've been looking at Credit Karma. Credit Karma said I had whatever. Right. And it's just not that.
Yeah,
and so
not
there's
accurate.
Yep. Yep. So when I have somebody, even if they're, a year out from purchasing, I always say, let's go through the pre-approval process. We're going to pretend that you're buying right now.
Right.
And we're going to see where we land.
Right.
And if it's not where we want to be, well, good news. We have a year.
Yeah.
We have a whole year to figure out what we need to do. And if you are where you want to be, then great. You have peace of mind for a year.
Exactly.
To know that next year when you want to go buy, you're exactly where you want to be.
Yes. Yes.
And people just don't understand it's never, ever too soon.
Right.
And then if we do it early, then over the next year while they're making some decisions, maybe, their car is going to get paid off.
Right.
Even if they're not going to pay it off early, just their payments are going to run out. Their car is going to get paid off. How is that going to affect your credit?
Yeah.
Well, to be honest with you, it's probably going to hurt you for a second, because that's what happens when you close any credit line. Literally, I had a borrower once who I gave him a credit repair plan. And while he was doing that, he wanted to go the extra mile. Okay. He paid off like a $60 collection. And it messed us up really hard. Really, really hard. He was not ready to buy when we thought he was going to be ready to buy, because even though it was a collection, he closed an account on his credit. And his score went down. And that always happens. When you close it, your score goes down for a second. It's just like when you get your credit pulled. Your score goes down for a minute.
Yep.
And you have to wait for it to come back up. And so, another thing that's important is to listen to your lender to a T, what she tells you to do.
Right. Especially the credit roadmap.
Yeah. Yeah. So, so that's a really big thing that we can help people that I don't think people understand. that we can tell them exactly what they need to do. And we can help them prepare for that.
Yes.
And, if it is kind of out of our realm, like, we're not credit repair specialists. We are mortgage specialists. So there is a time where it's a little too much for me to deal with. It's just not my expertise. Despite seeing it all day, every day. We have the connections to send people, to somebody that will help them, because we all know that there are credit repair specialists that are not working in your best interest.
And you're paying for them.
And you're paying for it.
That part is like,
yeah.
Are they really helping you?
Yeah.
Or are they just
I just had someone
money?
recently that was working with a credit repair specialist, and they told her that she should stop making payments on a debt that she had, let it go to collections. Keep in mind, this is like a $20,000 debt.
Oh my God.
Let it go to collections. And then after it's in collections, they would settle with the company.
Like for a smaller amount.
Correct. So she does this because she's paying for a service and she's talking to an expert thinking that they're telling her the correct thing. She does this. Her credit goes way down naturally because she stopped paying for it. And then they called the
creditor?
Yeah,
that's okay.
They called the creditor, and the creditor said, we don't settle for less.
So she still is going to have to pay the same amount that she's
But now it's in collections.
OMG.
Yeah. And now it's this huge problem that never had to be a problem. She was making all of her payments on time. She was fine. But they told her that she would be able to pay less. And
not making a payment, to me, that's just straight bad advice.
Yes. Yeah. Oh, yeah. Yeah, definitely.
Why would you not make a payment?
I know.
Yeah.
I know.
Well, it's good that she talked to you.
I know. Yeah. So now we're on a better path. I've helped her, and we're going to get into a better position so that she can get where she wants to be later. But it's just, man, you think you can trust everyone, and the sad reality is that you just can't. No. So you've got to find your team of trusted advisors.
Which are Alyssa and myself.
And when you find a good one, you stick with them.
That's right. Yeah.
And
never go with people that tell you not to pay your bills. It's like, what? Yeah, it's like you telling somebody to drive a car, but you can take off the front two wheels. You're not going anywhere. You're not going nowhere.
Yeah.
Okay, my little rant. But I had a great question and it just left me. Oh, as LOs, what would you say are the two like things that we provide to our clients? I always say understanding the finance, introducing you to realtors in the area. Would you think those two are the two core things that we do, or what would you think would be your top two?
Yeah. So education's definitely a big one. We definitely have connections to the local realtors, local vendors in general. So that's a big one. And there's so many things that we really do have to offer. So it's hard to say
like your top two.
Yeah, but I mean, for me, like I feel like where I add the most value is just that I care about you.
Gotcha.
I
got you.
I care about you. I care about your family. I care about what's going to happen to you tomorrow, next year, the year after that.
Right.
And that I guess kind of ties into all of them because I care about you. I educate you. I supply you with the right people. So I'm going to go with that's probably my number one.
Okay.
Is it starts there and then you get all of the other benefits because of that.
Because of that care.
Yeah.
I like that. That was good.
Yeah, thank you.
Yes.
And from the heart.
Yes. Gotta have it from the heart.
Yeah. I've always said I don't think I could ever have a job that I didn't care about, you could be a salesman and not really care about what you're selling, but I just, that would never be me. That I like, if you asked me to sell this pen, I couldn't do it because I don't care about selling the pen. you know?
But when you meet an entire family, husband, wife, whomever, their kids, you know, you kind of become family with them.
Yeah, you really
so
do.
I get the caring part. Yeah. And they're calling, asking questions, and it's like, you know, I want to help them because they're making this huge decision.
I always stress to all of my clients, don't feel bad about asking me the same question 6 times. I'll explain it 7 times. I don't care. Yeah, there are no dumb questions. I will explain it as many times in however many ways I need to explain it for you to understand what you're doing. It's the biggest purchase of your life.
It is.
You know, it really is. And you need to know what you're doing.
You do.
Yeah.
Buying a home is not fast food. Go ahead and get that out there. It's not. It takes time.
Yeah.
And we're here, obviously, to help you during that time. So,
yeah. How do you feel about people who are shopping for a lender that are only looking at the rate?
Trying to see examples that I may have. Well, when it comes to shopping for a lender, like you said, the caring part is going to be the core. You definitely want someone that's going to direct you in the right direction. So ultimately, you can buy a house. You know, I mean, the number one question is always going to be the rates because that's just what people are hearing every day on TV, on the radio, social media. Rate is just what it is.
Yeah.
But once you start kind of peeling off the layers of understanding, okay, you want to buy a home, where you want to buy a home, where your family want to live, what community you want to live in, you know, what you want to be near the grocery store, Publix, like where you want to be.
Yeah.
Like once you start understanding what they care about, you know, you're not pushing the rate to the side, but it ain't going to be like the number one, like, okay, we're going to talk about rate and that's it. You got to kind of start digging and understanding buying, where they want to buy, where they want to raise their family, you know, or where they want to live the remainder of their life.
Yeah.
To me, those things are more important than talking about an interest rate that's going to change next year. Yeah. So that's kind of how I see it.
Yeah. Yeah. I definitely have some people that they start out and they're only shopping the rate. And not that like I want to get you the best rate. I definitely do want to get you the best rate that I can.
Right.
But sometimes there are going to be competitors that have a better rate.
Right.
And so there was one that I had that it was like 1/8% lower than what I had. And I tried so hard. I really wanted to match them, but I just couldn't.
Right.
And so I just flat out said, at this point, you got to ask yourself, who would you enjoy working with more?
Yeah.
You know, do you like me 1/8% more than you like this other lender? And they took a second. They were very silent, and then they were like, you know what? We do like you 1/8% better. Right. We do, and that was one of my favorite transactions. They were so great. And and that's the reality of it is because, you know, this other lender had a little bit of a lower rate, but they didn't pick up the phone every single time they called. They didn't answer every single text message. They, you know, they weren't there 24/7 and I was, and I cared about them. And, you know, now I'm part of their, they set up a Google Photos album of their move-in. It was quite an experience. And I'm part of that Google Photos album, and I loved that. I'm just like, wow, I feel like I'm part of your family. And it was so fun. They were just so fun. So yeah, I mean, like that's the difference is, you know, being that lender instead of just saying, well, I'm 1/8% lower. So, you know, and which is what, a couple of dollars a month, you know, which, you know, it's not nothing for some people. And I get that, and that's fine. But you know, you gotta like who you're working with because we're stuck together for a little while.
We're here for life.
Yeah.
We're having you, we having your kids, your grandkids. Everybody, family and friends. We having everybody.
Yeah. All right. Well, I think that's all we have for you guys today. We're going to be doing these videos once a month.
Yes.
So if you have things that you want us to talk about, please reach out to us. Let us know in the comments. Send us an email, give us a phone call, whatever you need. And we are in the Triad area. We're both licensed in the state of North Carolina. So if you're looking to buy, refinance, prepare, just talk to anyone about the home buying process. We are here for you.
Yes.